Hello there. Welcome back to EPM F5. Today, we want to look at a question paper from November 2022. So this question paper that we have, and we are going to look at specifically on question 3 at part 3.2. So that question is on the preparation of a projected master budget. So we can go to our question. So this is the question that we have, question 3.2. And the question reads, it is customary for the Minister of Finance in the Republic of South Africa to deliver the budget speech after the President's yearly State of the Nation address, in brackets SONA. The budget is a way of expressing the financial plans of the country in measurable terms. In business, budget is used or forms part of financial control because they set targets for the business income and expenses over a reasonable time frame, usually one financial period. As Mark Jack Dealers, financial manager, you are given the following information from different departments of the business. I use the information given below to draw up a projected master budget for Mark Jack Dealers for the year ending 31 March 2020. Raw materials are accounted for. We are given as 550,000 rands. Then in brackets use answer sheet A. So we have got an answer sheet that we are given that we are just supposed to fill in. So what is important is that we are being asked to prepare a projected master budget. We are being asked to prepare a projected master budget. So for this projected master budget, is for the year ending 31 March 2020, for the year. So usually the period of this projected master budget is on average prepared on a yearly basis. So very important to take note in terms of the period that is required there. So we can also try to understand what we mean by a projected master budget. But basically, a projected master budget is the aggregation of all the lower level budgets which are prepared by various functional areas of the business. So when you integrate those budgets from different functional areas, now then we come up with what we call a master budget. So the master budget, in other ways, it covers all the budgets that are prepared at that business. When you bring them together, they form a master budget. And also it shows a company's projected income and expenses for a specific period. Usually it's a period of 1 year. So this is what we have in terms of an explanation now in terms of what we mean by a projected budget. So for this projected budget, we are going to prepare a statement that is going to show us this budget. So on this statement, it's also important that we take note that there are some formulas that are going to describe this statement. We are going to start with sales. We are going to start with sales there, sales figure, and then we are going to subtract the cost of raw materials. Cost of raw materials. When you do that, when you say sales minus cost of raw materials, you are going to get the figure for gross profit, and then we add here. Now you add other. There you are supposed to add here. You add there. We add other income that we have according to the information that we are given. Then when you add other income, you are supposed to subtract now. Then you subtract the operating expenses. Just say total operating expenses. So after subtracting the total operating expenses, then the figure that you are supposed to get, that is at the end of this budget, this is the figure that we'll be trying to find out. We are going to have a net surplus or a deficit. We are going to have a net surplus or deficit. A net surplus or deficit there. So this is what we have here. It's a net surplus or deficit. So this is basically, this is going to describe this master budget. So we are going to start with this figure for sales. So this is the figure that we are going to start with for sales here. So we are going to try to find out what do we have in terms of sales there. So we can go to the question now and try to find out the first figure of that budget. What actually do we have there? So So for the figure for sales now, you see that we are given the forecast sales in units here, forecast sales in units. Then we want the value of the sales. Then believe that we are told that selling price per unit now is 3,500 rands. So to get the total sales now, we just say our forecast sales in units and then we multiply by our selling price per unit so that we get the value. So we are going to say 3,500 and then we multiply by 275. Then there, if you calculate it very correctly, there you're going to get 962,500. This is the starting figure. Then you can go to answer section to summarize that working. There we have our sales at the starting. So here it means we've got sales, sales. Then in brackets, you just summarize your working. We said 3,500, 3,500. Then you multiply it by 275 to get the value of the sales. Then the answer is supposed to come here is 962,500. So this is what we have in terms of sales. And then remember, after that, we are saying we are going to subtract cost of raw materials. So here you can just say less cost of raw materials, less cost of raw materials. So we can go back there and check the figure that we have in terms of cost of raw materials in the question. Right, and if you go to the question now, you'd see that at the beginning of the question, we are told that raw materials accounted for 550,000 rands. So this becomes the cost of raw materials. So you're going to put our 550,000 rands there. So we go back. Go back there to our answer section. So here we've got 550,000. Then this one we are saying less here. So it means we are subtracting. Then you can show in brackets that we are subtracting. So this is a sign that we put in our statements to indicate that it's a subtraction that is taking place there. So obviously now we are going to say 962,500 to subtract 550,000. And then the figure that we are going to get there is going to become our gross profit. It's going to become our gross profit. So if you subtract there, you're supposed to get 412,500. So this is what we have. And then beneath that, we go to the section of add other income. We have to look for other income that we are given there in the question. So what is going to happen here is that the other incomes, we are going to list them beneath here. And then when we list them, the total of the incomes, we add them, the total is going to come here at this site. So we can just list the other income that we are having in the question. We go and check what we have in the question in terms of other income. So we can go back. Then, right, we are here. We are the other income. We are going to find it in this section. Remember the sales we've already entered these parts. So we can go to the other side. We've got government subsidy. Remember, government subsidy comes as funding that is received from the government. It's an assistance. It's an assistance process that is being issued by the government to business, mainly business. Those businesses that will be facing high cost of production, they're assisted by the government through the fiscal policy. They issue these subsidies as assistance to firms of businesses that are facing a mainly high cost of production, so that the cost of production goes down, with the main intention of helping the consumers that prices prices will go down. So this is the aspect that we have. So we have government subsidy here. Yeah, is one of the other incomes that we have as government subsidies. So 1,500,000 there. Then we've got also interest from investment will come as other income again. We've got 260,000. And then lastly, we've got contribution from stakeholders, 1,850,000. So this is what we have in terms of other income. So it means our other income are going to range from there to there. So this is representing our other income. So this is what we have. So you can just go and list them there under other income. And obviously, we're going to add the total to put there at the top. So we go back to our answer section. So now we are here, we are now listing the other incomes that we are having there. We are having our, we can start with interest from investment. Interest from investment. And we are going to put them here, and then the total will come here. So it's now interest on investment. From investment, we got 216,000. 216,000. Then we also have a government subsidy. We also have our government subsidy. Our government subsidy. Then for our government subsidy, the amount that we're given there, the amount given there is 1,500,000. Then we can go down. Then after that, we can check another income that we have. We also notice that we've got also contribution from stakeholders. Contributions from contributions from stakeholders. Contribution from stakeholders, we've got 1,850,000. So these are the three elements of other income that we have. So we can now add 260,000 plus 1,500,000 plus 1,850,000. And the total, we are going to put it here representing our other income. So we can simply do that. So here now we are saying our total here. If we add those three figures, we are going to get 3,566,000. Here you get 3,566,000. So this is what we have. So this figure, remember, we are saying add here. So we are adding it to our gross profit there. And then the figure that we are going to get here is called total operating income. It's going to come here. The total will come here. Yes, total operating income. So if we add these two figures, the total that you are supposed to get there is going to be 3,978,500. We've got 3,000,000 here, 978,000, and then we've got a 500 that we have here. So this is what we have in terms of our total operating income. Then beneath that now we are going to the section of total operating expenses. Total operating expenses. But then we are subtracting this total operating expenses. So we are just going to say less total operating expenses. We subtract it total operating expenses. Then the total operating expenses, we are going to put the elements of operating expenses beneath that. All the operating expenses that we're having in the question, we are going to list them beneath the year. Then the total, we put it here, and then we subtract it since we are saying less. So this is what we are going to do. So we can go back to our question to check what operating expenses do we have. We are seeing that here we have these ones that are representing the revenue. So we can go to the next page to see what we have in terms of our expenses. So we've got selling and administration budget. So all these are expenses. All these are expenses that we are having. So we are going to see that this section is going to represent our operating expenses. And also we are going to see this one also. Let us see there beneath that we've got our overhead budgets. So it means also if this section also is under operating expenses. So we can just maybe include them all. Also if this one is also representing our operating expenses. So all these are our operating expenses. So we can start from the beginning. and go down and pick them all. So we've got telephone there, 12,000 there, and then also we have traveling expenses. These are operating expenses, 65,000. Telephone 12,000, traveling expenses 65,000. So we can go there and enter those figures. So we are saying we have our telephone. Then we are going to list them in this column. Telephone, we have got 12,000. Then we also noticed traveling expenses there. Traveling expenses. Then for traveling expenses, we have got 65,000. So we can write our 65,000 there. Then we can go back to check other operating expenses. Then beneath that, we've got refreshments at meeting, 35,000, and also we have stationery, 4,500. These are all operating expenses, so we can go and list them. Beneath traveling expenses. Now we now have refreshments at meeting. Refreshments. Refreshments at meeting. And the figure that we are given there is 35,000. And also we have got stationery. Stationery is 4,500. And then we check others that we have there. So beneath stationery, we've got bank charges, 15,850. And we also have got audit fees, which is 12,000. And we've got advertising and marketing, 20,000. So we can go and list them, these three. That is bank charges, audit fees, and advertising and marketing. So we can just go there and put them. Right, we are here. So beneath stationery, we have got bank charges. Our bank charges, we have got 15,850. 15,850. And then beneath bank charges, we've got audit fees. Our audit fees, we have got 12,000. Right, bank charges, we've got audit fees, and then also we have the one that we noticed there, we've got advertising and marketing. Advertising and marketing. Advertising and marketing, 20,000. Then we can go and check other operating expenses that we are still having. So we're now on the direct labor budget there. And then we also have some operating expenses that we have there. We've got office salary, which is 1,800,000. And then we've got office training there, it's 45,000. And then overtime, we've got 120,000. So we can just go and put them all. So here we are saying staff salaries. Staff salaries, we've got 1,800,000. And then we have got our staff training. Staff training, we have 120,000. And then we have got overtime. Overtime, we have got sorry, staff training is 45,000. It's a mistake there. Staff training, we have 45,000. You can just go and check for staff training. It's 45,000. Then overtime, we've got 120. Staff training, 45,000. Then overtime is the one with 120,000. So we can go back, check other operating expenses that we have beneath. Then we have got water and electricity, 85,580, rental, 120,000. Then we've got insurance, 40,000. So you can just go and list these ones there. So we go there. So now we have got water and electricity, water and electricity. Water and electricity, we've got a figure of 85,580. 85,580, and then we will also have rental. At rental, we've got 120. Then we can go down. We are seeing that now what we have beneath rental, we've got insurance. We've got insurance, which is 40,000. So we can go back there to check, recheck if you've got anything else. So we are seeing that we are here. So this marks the end of all the operating expenses that we have. So in this case now, we go back and add the total. So what are we going to do? We are going to start there. The figures that we have from telephone, we add them all, going down to insurance. And then the total that we're supposed to get there, the total will come here in line with our total operating expenses here. So what are we saying now? We are saying if you add the total that you are supposed to get there is 2,374,930. So this is the total that we have, and we are saying less here, remember? So we put in brackets to show that you are subtracting. So it's very important that you put in brackets because to tell you, it will give you a signal that you are supposed to subtract here. So if you don't put brackets, you might be confused and not subtract and get a wrong answer. So this is what we have. So we now subtract 3,978,500 minus 2,374,930. Then the answer that you get is supposed to come down here. It's going to be here. That's the answer that you're supposed to get. And if it's a positive, we are going to call it a net surplus. If it's a negative figure that you get here, it's supposed to be net deficit. So this is what we have. So if you subtract there, you would see that the figure that you are supposed to get there is going to be a positive figure. It's going to be a positive figure, which is 1,603,570. And this, since it's a positive, so we're going to call it a net surplus. So here we've got a net surplus that we have here. So this is what we have, guys. So to just confirm this positive figure of a net surplus, we can go back there and try to see why we got a positive. We got a positive because we are saying total operating income minus total operating expenses, and our total operating income is greater than this one. So if you say this one minus this one, obviously we are going to get a positive figure. So this is what we have, guys, in terms of a projected master budget. Hopeful this video was helpful to you. So those who have subscribed, please subscribe and share. We'll meet again in the next video. More videos are going to come that are going to assist us as we prepare for exams. We'll meet again in the next video. With that, I'm signing out.